Can you just talk a little bit at a high level about, I know there's certain groupings in terms of the strategies hedge funds employ. Can you just talk about what those major groupings are, like in terms of the types of strategies hedge funds use?
Yeah. I mean, in some ways, I think probably the best way to sort of what the heck is a hedge fund, right? In general, what hedge funds are trading and investing in public markets in an attempt to generate, better than index returns. And there's a couple of different flavors or ways in which funds do that, or strategies that are typically achieved. So you have something like global macro, right, where those funds would be typically trading directional views on major asset classes like fixed income or commodities, currencies, credit, equity indices, something like that. So generally not stock pickers, generally trading macro asset classes. Then you have something like an equity long short, where they're trading typically specific equity views or sector views or country views in the context of overall long and short positions in stock sectors, in the stock market in one form or another. You have kind of a different flavor, which is what's called often fixed income arbitrage, but really it's just a set of fixed, in the same way you can have your equity long short trading. There's another set of funds that typically make money in trading fixed income products, fixed income and credit products. There's hedge funds that specialize in event outcomes, so specific elements of the capital structure, mergers, things like that are happening amongst companies. So they're real specialists in that's called event driven. There's funds that focus on emerging markets. That's a reasonable chunk. So, not typically many of the big funds will focus on developed world equity markets or developed world fixed income markets. And so in contrast, many funds will focus on equity markets. And then finally, I think a big, an important area is something called managed futures, which is typically those are trend following or similar strategies, using futures as the primary way in which those are exhibited or those positions are held across a wide variety of markets. Yeah. In some ways, there's some overlap between those managers and what global macro is doing in terms of the opportunity set. They're just approaching it in a particular way, whereas global macro might include things like value or intermarket action or fundamental views. Typically, your managed futures investors will be applying views on trends of price across asset classes in order to develop views. That's a whirlwind tour.
There's a lot going on there. So is it fair to say most of them are pursuing like an absolute return type strategy? They're trying to manage drawdowns?
Yes. I mean, most funds are trying to beat cash is the basic idea. I think practically what you see is that most hedge funds have a little bit of beta in their returns. And the reason why that is because I should say, just when you think about the sources of return, beta is a passive exposure to asset classes. Alpha is making bets in markets in order to generate return above that passive investing. And typically these funds will have a little bit of passive portfolio exposure, primarily because, beta or the passive holding of asset classes, you would expect to go up over time. So it's a positive expected return trade. And so therefore, and it is often complementary with the alpha that they're generating in order to create a more consistent return